Now that we have our T account balances figured out, we can start figuring out what Marge's Sofa's income was for the period by first preparing their schedule of cost of goods manufactured. And with your schedule of cost of goods manufactured, you always begin with your beginning WIP. What was Marge's beginning WIP? I'm going to go way back to the beginning here, and we are going to see that in the very start of our description, Marge's Sofa is a brand new company. If they're brand new, that means that they started business during the period, and therefore they didn't have anything. So we can assume that their beginning WIP was a big fat 0. Next, we need to account for the 3 cost components that went into production to figure out the amount of costs that we incurred during the period. We're going to start by figuring out what amount of direct materials we used by using what I call the Pepsi formula, figuring out based upon what we had in beginning direct materials, what we bought for direct materials, and what we have left at the end of direct materials, what we actually used. So again, Marge is a new company. We can assume the beginning is 0 for everything. How much did they spend in terms of purchases for direct materials? Well, if we go back to our journal entries and we find our very first entry, it says Marge's purchased $29,000 worth of raw materials, $24,000 of which were direct materials. So the amount that they purchased during the period was $24,000. Direct materials available for use is always equal to the sum of what you started with plus what you bought. They didn't have anything to start with. They bought $24,000, which means they could have used $24,000 worth of materials in production, but they probably didn't, and I assure you they didn't, because they have ending direct materials. I know this because when I look at the balance of their raw materials inventory direct account, I see that at the end of the period they have $15,500 left. So, wrong statement, there we go. What is their ending direct materials? It's equal to, I'm going to put a negative sign in there because I want this number to display negative, that ending balance of direct materials, $15,500. So if they had $24,000 worth of materials they could have used, they didn't use $15,500, what did they actually use? We'll add these two together because the second one is a negative number and see that they use $8,500 worth of direct materials. We can go check our job cost records to make sure that makes sense. $8,500. Can we confirm that by looking at the direct materials used on the job cost records? Well, for job 1, we used $3,500. For job 2, we used $4,000, so $3,500 plus $4,000, we're up to $7,500. And then for job 3, we used $1,000. That's $8,500. So indeed, our job cost records support the fact that we did in fact use $8,500 worth of direct materials. What about direct labor? What amount of direct labor was used during the period? Let's check our job cost records for that as well. We used $4,500 worth of labor on job 1. Job 2 caused us to incur $6,000 worth of labor costs. Add those two together, we're up to $10,500. And then $1,000 of labor was incurred for job 3. We can also confirm that on our journal entry page for labor costs. $4,500 plus $6,000 plus $1,000. That's all direct labor. That is $11,500 in total. And then we have manufacturing overhead, important word here, allocated. What amount of overhead did we allocate to jobs? We have that in our journal. We have that right in our records right here. We allocated $17,000 worth of manufacturing overhead to jobs. So we say equals, go back to my journal entries and grab that $17,000. So if we spent $8,500 on materials, direct materials, $11,500 on direct labor, and $17,000 on manufacturing overhead, the amount of costs that we incurred during this period was $37,000, which again, we can also confirm by adding up the total costs of our different job cost records. $15,000 for job 1, plus $18,000 for job 2 puts us up to $33,000, plus $4,000 for job 3 adds up to that $37,000. So what are our total manufacturing costs to account for? It's equal to what we already had committed at the beginning of the period, since we're a new company, that was 0, plus what we incurred during the period, which was $37,000. We have $37,000 worth of costs which we have to figure out what portion of that is still committed to jobs that we are working on the period end, and what portion of that went into jobs which we finished producing during the period. Well, we can find out what our ending WIP is right now, because if we just go check our T accounts real fast, we see there's none in job 1, there's none in job 2, but we have $4,000 of costs committed to job 3, which we are still working on when the period ended. So if we go into our COGM schedule, if you will, and it equals minus, I'm going to go back to the T accounts, and I'm going to bring that $4,000 over. We had $37,000 worth of costs. We're trying to figure out what portion of that is in jobs we're still working on and what portion is in jobs that we finished, past tense here, manufacturing. Well, if I add those two numbers above it together, I come up with $33,000. What I'm saying here is we've spent $33,000 producing goods during the period for jobs which we finished. Is that true? We can check our journal entries. Okay, look at that. We spent $33,000 on goods, on jobs during the period to make goods which we finished. So our cost of goods manufactured should be equal to the $33,000 that we put into the jobs. And with that number, we're ready to move on and start making our income statement.